Hey folks, this is Brian Persad. I'm guest hosting for Rav Toor. We're talking about real investments, and guys, I promised Rav that I'm not going to make a mess of the place while I'm guest hosting. So that's why I brought in Glenn Estrabillo.
Excellent.
The transformational real estate, transformational investor.
Super.
And you look like you got a 10. I don't want to be jealous, but I am jealous. You have a 10. Why do you have a 10? It's April right now in the GTA. Have you been outside?
Absolutely. It's freezing. Well, it's one of the things why I love Canada, because we have seasons, and it enables me to appreciate when I'm away on the beaches.
And so, how much time do you actually spend away on beaches?
On beaches, I'm usually away probably about 8 or 9 months of the year, and from time to time, about a third of the year, I do come to Canada. I try not to be here during the winter, but you know, my clients have been asking for specific guidance, so here I am.
You know what that is? Actually, I'm going to rub this off. It's a bit of luck, because I want some warm weather luck from you.
I'm bringing the sunshine.
Okay, so you're bringing the sunshine today, and so you are a transformational investor, and you basically live what you're talking about.
Yes.
You've created systems and a structure in place to allow you to make money where you could spend how long again? 8 months on the beach?
Of the year, correct.
Yeah, and it's not just one beach, it's around the world beaches.
That's right.
I mean, you're in Belize, you're in South America, you're in the UAE of all places.
Definitely. Yes.
So you've created a structure for people, and people can like follow you and do what you've done. May not be living on a beach for 8 months of the year, but they may want to do other things like, travel, focus on building a guitar or whatever, just living the life they want when they have the structure in place. So tell me a little bit more about that.
Yeah, a lot of times when people ask me what I do, I basically, my passion in life is really to work and develop people to distinguish, number one, what their passion is.
Yeah.
Okay, so that we have a direction to take them through to actually manifest and realize it.
Yeah.
See, wherever I go, I know a lot of successful investors all around the world, and I can count on the number, on one hand, on the number of fingers on one hand, the number of them who their true passion is investing in real estate. Yeah. Okay, it's not. My true passion is not investing in real estate. Yeah. We just use investing in real estate as a vehicle to allow us to build the systems and generate the automaticity in our cash flow so that we can then go and pursue our passions anywhere in the world. So that's basically what is the context or the background of what I train and develop and work with clients to achieve for themselves too.
So essentially, you're a hacker. You're a wealth hacker.
Wealth hacker.
You found a shortcut to be able to make people to invest, to be able to achieve their dreams. So that's essentially happened. You found a loophole in a system that people actually don't follow because their education is in something different, and they think there's only one way about going about that.
Yeah. It's basically what we do is
you're a hacker on the beach.
Hacker on the beach, beach hacker. We have a way, and this is basically from my life experience, because I grew up, before I started investing, my background is engineering, so I grew up following a very set, rigorous routine that I inherited from parents, teachers, and everything. And it worked great. Got an engineering degree, worked for a couple of years with GE Canada, but there was always something inside me saying, you know what, there's got to be something more. So then I started to investigate how to be an entrepreneur, and specifically how to invest in real estate. And what I found early on, thankfully, due to some great mentors at the very beginning, but also some just hardcore resolve on my part to press through any challenges, was what is a key to my success, and what's a key to many of the success of the clients I work with, is we have a three-pronged approach to educating people, to ensuring the knowledge being transferred from myself and my partners to the people we work with. It's what we call hard, soft, and hard. Hard is everything to do with the mechanics.
Yes.
All the strategies, tips on how to invest in real estate.
Which is what most books and seminars focus on. But if that was the case, everyone would be success.
Exactly.
If it was just the
mechanics. If it was just that, and like you said, Brian, there's a huge resources. You go to any of the bookstores, there's tons of resources for the mechanics.
Like literally everything's on Google.
Yeah. You can. Yeah. Absolutely. The second thing, though, on the soft side is what it takes for the person at a human being level to elevate their character to be a match for the wealth that they're actually going to be producing in
So
their
that's
life.
kind of like a mindset thing?
Mindset,
Yeah.
attitude, transformational
Belief,
abilities,
yeah.
belief. Yeah, because I'm sure you've heard, you know, when a statistic that of all the majority of the lottery winners within a year, it's something like over 90% are broke within a year.
Yeah, look at that. It's because they have the mindset.
They haven't actually elevated their character to be a match for all this money that they've attracted to themselves. And then what do? They rely on past mechanisms and past habits and
Which was making them broke in the first place, and they become broke again.
Exactly. So it
Yeah.
becomes a self-perpetuating cycle. So on the soft side, it's very critical to elevate your character, deal powerfully with the challenges, distinguish any barriers to your natural freedom, power, and self-expression in life, and empower yourself to transcend that so that you elevate and transform to a whole other operating state in life.
Mm-hmm.
So that's hard, then they're soft, but we also engage in a heart component,
Yeah.
and that's important. Heart has everything to do with, we call it gut. Gut for me stands for God under there.
Yeah.
It's not a religious conversation or a religious context. It just means, whatever that innate knowingness you have in your gut that ties and keys into your emotions and your intuitions, this is a very critical aspect that is at the core of a lot of successful investors' success.
All right.
Because they have that intuition.
We're going to go on break, but there's so much things we have to cover. Oh my gosh, the transfer of the heart. I want to know more about the heart and mindset, definitely, because there's a lot of mindset that we've been talking about on the show. Never had anyone talk about this stuff. I'm excited, man.
All right.
Let's do this. Let's go to break, folks. We'll be right back. Hey, folks, this is Brian Persad, guest hosting for Rav Toor on Real Investments. So check it out today. We're talking about something a little bit different. I know normally we talk about the mechanics about investing, but we're going to go in a different way. We're going to go in a different path. I'm kind of mellow right now. We have Glenn here, and we're talking about the mindset and the heart. I know, to me, they seem like the same thing. So what is the difference between the soft, that you were talking about, the mindset, and the heart aspect, which is the gut, you were saying?
Yes.
Yeah.
Well, largely, the difference between mindset being more on the attitude side, the belief side, and it's very tied to the neurophysiology and the energetics around, if you picture the mind, when I say mindset, when I say mind, I don't mean brain. I mean the all-inclusive energetics around the human body. Okay? Now, the heart center.
Do you mean energetics as in, I have to know how, if something feels good, that's the direction I should go in, type of thing?
That's
energetics?
No, that energetics is more of the heart side.
Okay.
Okay? The mind would be everything tied to the neurophysiology.
Okay.
The way you think, your
way you
cognitions, metacognitions,
Okay.
insights, awarenesses,
Yeah.
how you think and what you think about.
So understanding how you think and, just be present in that moment to see how your thinking patterns are leading to where you want to be.
Yes.
And then the heart side is, I guess, getting in touch with something other than yourself, maybe, or spirituality, God, whatever you want to call it, to be able to have faith and guide you. Am I getting it right?
Yeah, you're right on track there. You're right on track there, Brian, for sure. The heart side tying in with the intuition is actually a faculty of this energetic field of mind. Okay. Now we can go into quantum physics and quantum mechanics to explain that, because now science is caught up with what the ancients knew and passed down by oral tradition, but they're now
spirituality.
Through spirituality, through another connection with something greater than what our human experience is providing to us through our physical senses.
So you're essentially espousing like a yoga master for investing.
Yeah, because it's important, right? Because one can
breathe, while you're investing. Breathe, be present.
Get in touch with get in touch with the natural rhythms, the natural synchronicities, the natural resonance with who you are, who you're being, what you're dealing with in the situation, the kind of investments that you're deciding to participate in, the different parties on both sides of the transaction. It all comes into play.
So, I'm sure everyone has been in a situation before you know, someone's really handsome, really good looking, telling them what to do, everything seems right, but their gut is telling you, you know what, don't do this. But he's a really good influencer, and really good at, you know, arm twisting, really good at closing, whatever you want to call it.
Yeah.
And that person, you know, invested or did something and lost a lot of money. So the mindset comes in saying, you know what, don't like be negative, look at that as a lesson. And that lesson was to trust your heart, trust your gut, which was screaming, hey, get away from this guy, run, go to the beach, go to the beach, go on vacation instead of investing with this guy. You'll be that much farther ahead.
You got it.
So it's something you have to develop. Because all of us have that gut.
Absolutely.
Yeah.
We're all born with it.
We just have to learn to listen to it and get in touch with it.
Yeah, and you have to learn how to distinguish when it's your gut talking or your intuition talking and not your brain.
Okay, how do we do that? Because that's not an easy thing to do.
No.
Because my dad's telling me one thing and I hear his voice, you gotta become a doctor, don't invest. My real estate investor is saying, invest in this. And my wife's saying, let's do this, let's do that. We have all these voices in our head.
Yes, we do. And those voices are not ever going to stop. So the critical, I'll give you an axis to distinguishing between the two. It really only comes down to, you know how you're saying you have all these voices in your head? There really only is one voice that counts, and that's yours.
Okay.
So how you distinguish between whether it's your brain or your past telling you what to do in the moment versus
your programming.
Your programming.
Yeah, that you're now aware of when you're developing the soft side that you were talking about.
Yep.
Yeah.
To distinguish that from your gut, it really just comes down to what's the word you gave to yourself. I always ask my clients these two questions because I was asked very early on by my mentors, who am I and what is my life for?
Okay.
When you answer those two questions in such a way that for you, it feels like that's the right answer, this is who you are for yourself and what you've been put on this planet to do. I promise you, when you look at every decision that comes up in your day-to-day, if the action is consistent with who you are and what you're here for, it will always be 100% in line with your gut.
So time out.
Sure.
So let's give an example. Someone's approaching you, say, hey, invest in this with me, it's great. How do I apply those two questions to, here's an investment, is it good?
Right.
Yeah.
So for example, for me, if so the answer, hypothetically, the answer to the question, who am I, is, I'm a person of integrity, responsibility, and a high performer in life. And what I'm here for is to make the largest lasting difference in as many people's lives as possible. That's your own
personally answer to the two questions?
Two questions.
Okay. So if I approach you, invest with me.
Yeah.
Yeah.
So then, immediately what I get as a sense from you is, who are you? Who is Brian as a person?
Okay.
Okay, do I get a good vibe from him?
Yes.
Is he somebody who resonates with integrity, responsibility, and being a high performer in life?
Yeah.
Because if they don't, chances are, we're not going to have a very resonant working relationship.
But isn't that something that you could influence? I know these guys that are really slick. They practice how to be genuine.
Right.
They take pictures with presidents and Oprah and they do all this stuff.
Yes.
How do we know that we're not being fooled buying into an aura or a package that they create? I mean, do we have to take them to dinner versus saying, what are the returns on this investment? And just talk to them for 3 or 4 hours and ask them questions?
No, largely, and and I'll just say this, but each person just gets to check in with themselves. Like, you can check in with yourself on this point here. Largely, we already know within a split second of meeting somebody.
But is that fair to make a decision on someone in a split second?
Is it fair for you?
Well, I don't know. Like, should you judge? Because what you're saying is split second, I'm instantly going to know if this is right or not.
Right or not consistent with you.
Okay.
Okay? That's the thing. This whole conversation about prejudging or, don't judge a book by a cover, I agree with if it's got nothing to do with you. However, if you look in your life, you will know that the people that you've attracted into your life have been attracted to you because at some point very early on you isolated, there is some aspect of this person that I actually resonate with. Now, I'm not saying that's the only reason for why not work with somebody, because that, to flow on to, should I work with this person even though I don't got a solid resonance with them in the beginning, that comes down to what's the answer to the question number 2.
Yeah.
right? For me, it's the lot to make the largest, biggest difference for as many people as possible.
Okay.
So if the deal they're bringing to me has the capacity for me to reach through into hundreds, maybe thousands of people's lives, to elevate their lives,
Okay.
I will take a look at it. Even if my first gut instinct of them is not quite on point.
And then you kind of go through the process and calibrate yourself to see if it's consistent. Because I could get you coming from the airport, you're hungry, you're cold, and you're
reacting to some
reacting,
situation.
and you could be in a bad mood. And I talk to you like, whoa, hey,
Yes.
okay, yeah, I'll take your card and call you. But then something about what you said kind of resonated with me, and then I go and I talk to you, and we're getting
to know you.
the vibe.
Yes.
So I trusted one of those aspects. It wasn't exactly you, it was the message that you were giving. And I felt that message resonated with the answer to question 2. Will it allow, sorry, what's the,
Will allow me to make the largest, greater difference in as many people's lives as possible.
and that's yours. So everyone will have the different 2 things.
Correct, yep.
So how do you find, and it's only 2 things. So how do you find those 2 things? Do you have to go to a meditation retreat in the Himalayas?
That's a great question. There's so many different modalities that enable somebody to reach those conclusions. For me, it happened when I was sitting on a sailing boat in the Whitsunday Islands off of the northeast Queensland on Australia on the Great Barrier Reef. And I just was challenging myself with these questions that my mentor asked me. And I came to these conclusions myself. But each person will have the opportunity to distinguish that for themselves. Now, I'm not saying you got to go to some exotic place and answer these questions. Sometimes it's easy as carving out just a little quiet time in your busy day, where you can just be alone with yourself, separate yourself from any distractions, and just think about these 2 questions. And something, I promise you, will arise.
You know, it's funny you should mention that. The host of the show, Rav, I've known him for many years. And when I first met him to now, it feels like he's a different person energetically.
Wow, great.
Everything Rav sets out to do, he accomplished. Everything. There's not one thing. I remember him saying, this is what I want for my life, and he does not get it. Before, I was getting a bad vibe. Sometimes I'd be getting good vibes sometimes. But now he's a completely different person, and it's because of his faith in God.
Oh, great.
So it was like his spirituality made him a huge success. So what you're saying is that, take it back up, folks. Don't always get in the how-tos. Focus on you first, and then those how-tos you'll attract.
Yes, absolutely. Yeah, because when I work with my clients, and which stems from the work that I did on myself first, when in the last decade, I retired twice in my lifetime. The first at the age of 28, but then...
Wait a minute, how old are you? I thought you were 28 now.
Oh yeah, no, I'm 12 years old actually.
Okay. Going backwards. I'm Rav Toor, actually doing here.
There he is, see? I'm meeting you a couple years earlier. Yeah, no, because right now I'm 36 right now.
No way.
Yeah. So I retired almost for the first time almost 8 years ago.
I usually find that when people are living like an authentic life, they always seem younger. And like Rav, he's losing all this weight. He's looking really young.
Great.
And he's in touch with himself. And I think when other people are not, I'm sure you probably see this, they're stressed out, and that ages you.
Yes.
And it maybe cause you to eat things or smoke things or...
Absolutely.
We're not judging. You can smoke and drink all you want,
exactly.
But it does have an impact on you.
Yeah. Absolutely. It neurophysiologically has a impact on you, and there's real molecules that actually get released with real electrochemical signatures that have an impact on every cell of your body when you're stressed, when you're angry, when you're confronted, when you're fearful. There are real biological chemicals floating through your body that are impacting. So that's why you see, like you said, people who have attained a certain level of enlightenment or a certain stage of peace and prosperity and happiness in their life, you see literally years get taken off their physicality. So so it's almost been 8 years since I retired for the first time, but when I retired for the first time, my character wasn't a match for the amount of money I attracted, and so I lost a lot of money immediately after.
And how did you make the money initially?
Initially, I started off with my first investment property was a small 3-bedroom, 2-bathroom house downtown Hamilton, just steps from McMaster University, and I turned it into a student rental. And then repeated that process in the first year and a half, I went from 1 property to 10, and then traded the equity in those 10 and bought my first apartment building that I still own today in Hamilton.
Yeah.
And at that point, you know, I had all this cash flow that was more than my engineering salary.
Yeah.
And I said, okay, I get to choose, do both or focus on one. So I chose to eliminate the engineering job, focus on investing in real estate. Then I lost a lot of money. And it wasn't until that experience where I actually had to look inside.
Yeah.
Because in the moment when I lost a lot of money, my finger was pointing to everybody. It's their fault, their fault, their fault. You know, everybody's fault. But my mentor said, look, every time you point the finger out, you've got 3 more fingers pointing back at you. Let's take a look at you. Who are you being, or what did you have?
Isn't
oh,
that
it's
hard?
Extremely hard.
Because like like day-to-day interactions with people, you don't get the reaction you want. It's so easy to blame them.
Oh, definitely.
Yeah. And it's just so easy to, you know, take credit for everything you've done, but also blame everything. I mean, that's a lot of work to do. Don't you get tired of going through life like that?
No, because in the immediate point, it may occur as hard, but I promise you, it's a lot easier than dealing with the impacts over time of not doing what's true to you.
So that's where the soft side comes in,
Big time.
that you are cognizant of your mental patterns, maybe your ego.
Yeah.
Yeah, so you're saying, you know what,
too, yeah.
I'm awesome, this guy shouldn't be treating me like this, but your ego, you realize it's your ego, and then you use that soft side to get back to the heart side.
Mm-hmm. Yeah.
Yeah.
Absolutely, and what it does is it gives you an opportunity to stop all the madness that's going on around you.
Yes.
Short circuit the past ways of being, thinking, planning, and acting.
Okay.
And give you an opportunity to invent a new future.
So that's what a lot of people do then. And when things don't go wrong, they read a how-to book, and then they find out they're not getting the results. Like I remember when the movie The Secret came out.
Yes.
You know, the movie The Secret is basically you visualize anything and you'll be able to achieve it. So if you want a Ferrari and a beautiful wife, paint pictures of the woman in the car, you driving it. A lot of people are like, I'm not getting this.
Yeah.
It's because they just have that mental part, but they're not tuning into the spiritual part.
Yeah. See, a lot
That's
of times
hard.
it is hard when you haven't practiced it, but I promise you, it's actually a lot easier than the alternative, which is going along with how you
Which is what
operate.
most people do.
Yeah.
Yeah.
And then, you know, the one thing about The Secret is this: a big part of why that didn't work for a lot of people is because they just flat out didn't believe what they were actually attracting or what they were drawing out.
So they
So
were
had a
saying
counter.
it,
And they had a counter intention.
and their mind was saying, you can't get that, dummy, you know.
And then they would believe that
They would believe that.
versus believing, I want that, I desire that. And the counter intention canceled out the initial intention, so they actually got everything that they deserved.
Okay, you know, I know that we only have so much time. How do you start developing that? I know what you did is you went on a yacht and you took some time for yourself, and you briefly mentioned that. How do you develop that side in you?
Okay, so the soft side or the hard side?
The heart side.
Okay, so the hard side.
Because I think there's, you know, Tony Robbins could tell you
A lot about
the
this
mindset side, yeah.
Yeah, a lot of, really the core work on developing the heart side is having a powerful answer to those 2 questions. Like I said, carve out a space and time for yourself. I like beaches because I like beaches.
Yeah.
But I tell my clients, you don't have to go to an exotic place to do this work. Take 5 minutes out of your day when you first come home or before, you know, once you get up, right when you wake up, immediately after you get up in the morning. Just instead of doing what you normally do, before you do the brushing teeth thing or eat breakfast, just sit for yourself, with yourself for a moment, and contemplate these 2 questions.
Your personal 2 questions
These 2, yeah, exactly.
that you have to take the time to find.
Yeah, because that becomes the anchor that grounds you for all the opportunities of practice developing this gut. Because all your actions will be from that moment looked at from, is this a match for my answers to question 1 and 2? If yes, take appropriate action. If no, don't take that action.
Why only 2 questions? Or why only 2 things you have to look at? Whatever your 2 are.
Why 2 is it's simple,
Yeah.
right? 1 and 2. It's not 10 steps. It's not 21 steps. It's 2 simple questions that are, if you look at it, they are two questions that have existed for human beings in our existence over millennia. So it's not like I made up these two questions. They came down being taught in very many spiritual texts, a lot of secular leaders as well, you know. So it's not something I made up. I just kind of put a 21st century spin on knowledge that is time.
You're being related this to people right now.
Exactly.
So it's unbelievable how, you know, how everything does tie together. Because I'm going to use Rav.
Yeah.
Rav's life just in the last 3 years, like I'm just amazed. And the only thing I could attribute to, and he'll tell you the only thing is his faith. And it just happens, like the answers come, people come in your life, and you're tuning into that frequency, whatever you want to call it. This is, you know, I don't know if this is the show for it. We're talking about real investments. Are you going to tell me about buying in the U.S. or buying in Costa Rica? Yeah. Or we're actually taking a different curve than I ever would have even thought of.
Yeah, that's what a lot of people don't understand when they begin to interact with us.
Yeah.
You know, at 1+12 is because they don't actually see that we exist not only to empower people to be financially independent, but we empower people to be financially independent, free human beings. It's both sides of the coin has to occur at the same level. Otherwise, you attract so much money and wealth, and you lose it the next year. Okay? Or on the flip side, you get a lot of spiritual enlightenment, but you're broke.
You have no money. You're broke.
Right.
Yeah.
So it's got to be a balanced approach that way, and that's what we focus on at 1+12, and it ties into the context of why we invest and where we invest.
We have to I imagine you get a lot of resistance to this message because there's a lot of programming out there, and we're going to touch on more of this when we come back from break. I'm excited to hear from you.
Thank you.
Yeah, absolutely. So, folks, we're going to go to break. Stay tuned. We'll be right back talking about our message. Hey, this is Brian Persad. We are here with wealth, I guess, guru, coach, yogi, Glenn Estrabillo.
Excellent.
I like that name. You probably get a lot of currency with that name. It sounds like very Latin vibe, really cool. It must work for you well on the beach.
Definitely works well on the beach, for sure.
So, I know we kind of went on a direction that's probably never been done on this show.
Great.
Talking about like your mindset, talking about trusting your intuition, developing that intuition, which is probably really important for people to move forward.
Yeah.
But something you said was really interesting. Set up the framework, the mechanics for when I was hearing you say, I was thinking in my head a perpetual money-making machine.
Brilliant. Yeah.
So how do we do that? And you started off buying a real estate.
Yes.
And you still own that real estate. Now you're traveling the world and you're teaching people with your message, with your organization. Tell us a little bit more about the machinery that you set up.
Yeah, sure. So what we do is we deal with a three-pronged approach with our investment strategy, and there's three axioms. It's called producing wealth, protecting wealth, and perpetuating wealth.
Okay.
Right? So we set up structures, number one, for how to secure our capital when we're investing.
Okay.
See, because most times, I'm pretty sure you've heard about it in real estate, they tout the horn about real estate, what's important is location, location, location.
Yeah.
Whereas for us, location isn't that critical.
Okay.
And it's definitely not as critical as number one, which is our concern as an uncommon investor, is security of our capital.
Okay.
How secure is our capital? Can we ensure that we get our capital when we put it into the investment, and we can get it out with proper legal contracts?
Yes.
The liquidity is one, but it's also the proper contracts. Yeah. It's the proper collateral and the way that we've collateralized our investments. Yeah. But also, it's in our savvy with working with all parties involved in the transaction to ensure that there's a mutual benefit for everyone. It's what I call a win-win-win transaction, so that everybody on both sides of the negotiating table, the end goal is one that will benefit everybody.
So I actually heard about this, people investing in real estate overseas in different countries, and they don't realize sometimes the government has a right to take the property back, expropriate it, and not pay them anything. Is that the direction we're going in? Is something a little bit bigger than that?
A little bit different than that, although in every given jurisdiction, especially outside of North America, there are different structures and the necessary legal remedies to follow to ensure that that actually can't happen, or if it does, there's some benefit derived out of that instance should it happen. But more particularly what I'm talking about is a lot of times a very simple structure when we talk about the protection phase is how do we hold title to the assets that we acquire. Because I meet a lot of new investors and they have their property in their own name. And I heard everything, and there's, yes, sure there's a lot of benefits for it, but I promise you in the long run, the benefits are far exceeded by the exposed liability of having your name on title to a property.
So what kind of liability are we talking about? If you own, let's say, a house, an investment property, maybe you're renting out the upstairs and you're renting out the basement or a condo, what kind of liability are you exposing yourself versus having a corporation?
Yeah, so sure, if an asset is owned in your personal name, what happens is, should there be any lawsuit against you personally, whether it has anything to do with the property or some other personal matter in some other area of your life, well, because that asset is entitled in your name, the solicitor or creditor could sue you and get access to that and completely eliminate that asset from your portfolio.
Oh, so, you know, I actually noticed that big developers, you know, when they're doing a big development, and I'm just using this name, Tridel.
Sure.
They're not calling the building Tridel and we're the owner.
Right.
It's, you know, 1234 Young Inc.
Yes.
by Tridel.
Yeah.
It's an actual corporation that owns that development that they set up for that development.
Exactly, and they do that, you know, one of the big reasons why is for protection, asset protection, and protection against liability, lawsuits. Not like Tridel has anything to hide, it's just good business practice to protect your assets, because they have a lot at stake in that building.
And once you have a lot of money, you become a target for people.
Yeah. Exactly. But then the whole other side of it has everything to do with enabling for other taxation principles that enable you to save on taxes. Not evade, save. Right? We're talking tax minimization, not tax evasion.
So there's some tax advantages, even owning a single family home in a corporation.
Yes, yeah, you have definitely a lot more flexibility, especially you know, with the fact that the different types of shares that can be issued to distinguish the different types of income that gets flowed out from the company.
So, do you own every property in one corporation, or do you set up corporations for every properties, or are you going into holding companies that own pieces of properties? Is it really complicated that you have spent a lot of money on a lawyer and accountant for?
Well, it's not, typically we have one structure for every asset that we have.
So every asset, whether it's a vending machine or an income property, you have a corporation?
Not necessarily a corporation.
Okay.
There's a structure.
There's a structure.
We could use in the corporation, and typically clients who work with us when they're first starting out, we empower them to use corporations, and if it's in the U.S., LLCs, in a very tax-advantaged way.
Okay.
But also a very asset-protected way. But there's an even more secure way of holding assets in Canada, U.S., and outside North America. But that's more of a proprietary structure that
You've made.
Yeah, that we've kept strictly for our clients. But needless to say, there's just other structures. There's about 4 or 5 other structures that go beyond the basic corporate structure that would hold title.
So that covers the protection angle. And what's the other angle?
So the other angle is perpetuation.
Perpetuation.
So perpetuation deals with the fact that, you know, Brian, you and I, let's face it, our skin bags are not going to be here forever.
Okay.
Okay? So
I plan on being here forever.
Ah, excellent.
Yeah, okay. Yeah, just to let you know.
Hey, I got it, cool. So do I, but just in various other forms. But when we leave this planet, or should something happen to us...
Yeah, I get bored and I want to give it everything to the kids.
Yeah.
Yeah.
You want to be able to enable your wealth to be transferred in such a way that the taxation is minimized and it's done in such a way that the asset is fully protected on its way from being transferred from you to your loved ones. Because what's the point of making a lot of money and building a lot of wealth if you can't pass it on for the benefit of your loved ones should something happen to you?
You know, I noticed that. I've seen a lot of, you know, last week we had a show on apartment buildings. And what me and the guest Marcin actually discovered is a lot of these people own these apartment buildings in their personal name and they're completely paid off for. And one of the things they tell me is that, oh, I can't sell it, the taxes are going to kill me.
Right.
And they kind of leave it to the last moment and then they transfer it to the family, and the family has to pay all these taxes on the transfer of the ownership.
Yeah.
Yeah.
And oftentimes, like, we get clients who have to end up paying tens of thousands of dollars to us and the legal firms that we recommend they work with, because they didn't do things properly on day one for how to protect and perpetuate their wealth. It's a funny thing, recently, I don't know if you're aware of it, but you know the actor James Gandolfini, he passed away.
Yes,
well,
Sopranos.
Yeah, from The Sopranos. His will showed up on the internet. Yeah. That tells us whoever was handling his estate screwed up big time, because that's supposed to be private.
Yeah, I didn't even know that.
Oh, yeah, you can Google, you can find out. Yeah. And all that does is it just highlights now who taxing authorities can go after.
Oh, no way.
For James Gandolfini's wealth,
yeah,
even after he's passed. So we don't want people to be ever put in that situation where their private affairs go public. So we empower them to, yes, it may cost money and time to set these structures up on day one, but they will save you hundreds of thousands of dollars and thousands of hours of frustration in the long run should something unexpected happen.
So we talked about picking investments, and we talked about the mindset side and the spirituality side to know if it's right for you.
Yes.
Now we talked about the protection side, and now we're going into the perpetuation side. So this is kind of a whole program that people go into,
yes,
to be able, and everything kind of works together all at once. It's just, you can't separate everything else.
Correct, yeah. They all have to work harmoniously together to enable the right set of conditions for the investor to actually have the largest opportunity set for maximum performance.
So, I know the focus on Rav's show is what are the right investments, which are more the first side, the how-to side, and everything else. What are you recommending right now people get involved in?
Well, what we're currently working on right now is we do a lot of work in investing in the U.S., especially on the single-family side as well as apartment buildings and commercial complexes. Yeah. Why that is because when we take into factors, it's what I call a sweet deal ratio, the median house price divided by the average annual rents in a certain city or area. It gives you a good indication of the relative values on whether or not they're cheap compared to the rents that they draw or the yield, as opposed to going to jurisdictions where the yield is very low because the house prices are either too high or the average annual rents are so low.
But here's the thing, I see in the States, there will be properties like that in every city. But what a lot of Canadians don't realize is that there are poverty rates in the States that we may only see in Canada on an Indian reserve, where people don't have an inkling how poor these people are. They're on a lot of benefits and maybe food stamps. I find with those properties, you're dealing with the type of people, and it's very difficult to manage. Is that where you're saying to go with investing? No,
there's actually 36 different indicators that we use to identify.
So it's a little bit more than just the price to rent ratio.
Yeah, so I'll give you top 5. I look at population growth, both historical and trending in the future.
For the whole city or for that particular neighborhood?
For that city, and if I've got a large portfolio in a very specific neighborhood within a city, I'll do the analysis again just in that neighborhood. But for ballpark, to help people, get cast a very wide net to narrow things down, I look at job growth, historical and future trending, population growth, employment growth, that ratio of house price to rents, the affordability index, which takes into account the median incomes of the families in the jurisdiction, and the 5th one is what we discussed earlier, which is the gut, because the gut takes into account things that cannot possibly be measured by any statistic or demographic.
So that you're actually advising people, rather than buy it from someone who's selling it at a seminar, go visit and get down to dirty the property and see if there's actually a guy holding a 40 with a wife beater playing dice with his friends out the front.
You definitely can do that for sure.
It's actually really cool. When Google Maps started first coming out, I was looking at properties in Rochester, and I'm not serious. I didn't make up the guy with the wife beater with the 40.
You really saw that.
I really saw it. It is crazy, and I found out that neighborhood is really popular with Canadians buying into, but people don't know what they're getting into.
Wow.
Yeah.
That's crazy. Yeah, I once had a client come to us. He bought a bunch of properties from a seminar. Never looked at it.
Never looked at it.
Found out when he gave us the properties. I did a basic search, went to public records, couldn't find the property. I thought that was weird because I couldn't find any legal description of the property.
Okay.
Although I had the purchase and sale contract with the amount that he paid, signed by him and the seller. I go on Google Maps. It's an empty lot. There's no house there.
So he thought he was buying a house that he could rent out, and said, you know, that's what I find. A lot of people in the States, they're wholesaling it, and they know that most of the demand is being derived from people overseas or in Canada.
Right. Yeah.
And when they see Canadian, they don't see Canadian, they see sucker on your forehead. And they inflate the prices. This is a Canadian price, but there's really, you know, a back home price to people living there. You got to be on that stuff.
Definitely, yeah. So part of the process in the analysis stage that includes the 36 indicators takes into all these things that we just talked about to ensure that we are not getting the Canadian price, or we're not getting a house that doesn't even exist. You know, we empower our clients and the people who work with us to do that basic analysis.
So you're big on the U.S. right now?
Yeah, right now we like it, but what we're bigger on is in our own backyard here in Canada.
Okay.
See, I've been investing in the U.S. for the past four and a half years now.
Yes.
And when I was investing in the U.S., when no one was touching U.S. property, and then now that more and more Canadians, funny enough, Canadians, Australians, Indian, Chinese, and Filipino are the top 5 people buying in the U.S.
Filipinos from the Philippines?
Yeah.
Wow.
In the U.S., I was like, oh yeah,
it's kind of like the, you know, the prototypical immigrants that want to buy real estate. They're all buying it.
Exactly.
I actually heard a lot of people from England and stuff are buying it too, because their house prices are so huge.
So high.
Yeah, they're just you know, plopping money down.
Yeah, it's hilarious. I just found it funny that the Filipinos made into the top 5.
Yeah, that's amazing.
But in any case, when more of the foreigners started to come into the U.S., I started to look at the jurisdictions they were leaving. And of course, because I was born and raised in Canada, I started to look in Canada. And my partners and I, we started to see that although Canadians are a lot better off financially than the U.S., there's some budding trends that are coming up, like our debt-to-income ratio has been on a steady increase over time. We're pretty much at the point where the average U.S. family was at the peak of the recession in 2007. I think our debt-to-income ratio is 164. That means for every $100 of income a family earns, they got to pay or service $164 of debt, and so that puts a financial strain on the family. But also, in terms of affordability, you know, the average Canadian family are finding it harder and harder to afford the housing here in Canada due to higher house prices, but also due to employment incomes not aggressively tracking with the rate of increase of house prices. So families are starting to feel, even here in Canada. Now, when I saw these trends, I couldn't believe it myself, because it's like, there's no way that people should be defaulting if this is the case. But there's nothing being said anywhere about Canadians defaulting.
No.
But in the last 8 months, I can't tell you, Brian, how many clients have been knocking on our doors asking for our help because they are defaulting. I wouldn't have believed the charts and graphs if I didn't have our phone ringing so much from people asking us to help either themselves or somebody they know who's about to lose their house.
Now, is that because, you know, you're getting your name out there? Because I even said, you know, the bank, you know, the Canadian Bankers Institute is saying that, you know, it's less than 0.5% are 3 months in arrears. It's still kind of at that level.
It's still very
but
under
you're getting
the
more
radar.
people knocking on your door.
And why that is we've been coming out more in the public space just because our clients have demanded us to, because they have friends and friends and friends who they've been sharing the results they've achieved working with us, and so we've now been out to more and more public venues to get our message out, because we are positioning ourselves as a solution. But another reason why is sometimes it's the homeowners who are defaulting, but you know what, Brian? You know who else is calling us just as much? Is people who own the seconds and the third mortgages. And they got into the real estate bubble or the real estate rise in the last decade.
Yeah.
So they didn't they didn't cross all their T's or dot all their I's.
I find that there's a lot of
oh my goodness,
brokers out there that just put these people, put these investors in second mortgages with people that they know can't pay out this mortgage. It's only a matter of time before they default. On the real estate end, I've been seeing a lot of power sales occurring that way.
Yeah.
Yeah.
So that's what we started to see, and people were calling us,
saying,
either the
hey, protect my
homeowners,
wealth.
or the second mortgages, or the people on third going, I'm going to lose everything.
Yeah.
Is there something you can do?
Yeah.
So when those people, those kinds of people started calling, we started to focus a lot of our resources into what can we do for Canadians, given what they're dealing with now.
So Canadian lenders, you've been helping out private lenders that have been giving first or seconds that, you know, a broker introduced them to a set of people and they registered Untitled as a second mortgage, and you know, funny enough, the people are not able to pay off their first or their second.
Exactly. So we can provide a buffer, we can provide some liquidity in the interim to allow either the homeowner get their finances in order to put things in place so they can refinance and then pay us out, or we can provide
so you give them advice on how to do that and get out of the situation.
Yeah, advice, but we also implement certain structures and processes, working directly with the lenders in first, as well as if there's people in second and third. We like to include everybody in the conversation so everybody knows what's happening, so that if somebody has to, you know, if somebody's in second and the first completely forecloses and could potentially wipe out the second and the third, well, the person in second comes to us and says, hey, can you help out?
I want to touch on more of this, but we do got to go to break. So folks, if you want to learn more about the, I guess, a very different way of investing, stay tuned. We have one more segment. Check us out. We're here with Glenn. We're talking about cool investments.
Awesome. Great.
Hey folks, this is Real Investments. Guest host Brian Persad for Rav Toor. We're talking to an investment guru, an investment yogi. We're not going to go off in the Himalayas and you know sing ohms, but you have a different approach that I've never ever seen in investing in real estate.
It's uncommon, isn't it?
It's very uncommon. You must get like a lot of resistance for people, you know, saying, what is it that you do? But we have Glenn here. So Glenn, how do you have a company called 1+12? How do people, like, what exactly do you do?
Right. Yeah. So 1+12 is a professional real estate investing training company.
Yeah.
So what we found in working with clients over the past years is basic financial education, like the education end, just doesn't make a difference. What I mean by that is we could educate people, but 6 months later, we find they're actually not doing anything with it. They're not implementing. So what we found works better is not to be financial educators, but to become financial partners with our clients. So what we do is we educate our clients, and how we educate them is we actually empower them to invest in the same kinds of investments that we do. Here's how we do that. Like as you mentioned, our company's name is 1+12. So we actually form a company where 12 other of our clients who we educate become financial partners in the same company as us.
So you set that structure that you were talking about.
You got it.
Okay.
Yeah, so we set up this structure with 12 other clients who are now our financial partners.
Yes.
Then we educate our financial partners because it's mutually beneficial for them to learn and for us as their 13th member partner.
Okay.
Yeah.
So you're working with them through the spiritual side, and you're working with them through the mindset side, but you're also setting up the framework and everything else. Really interesting, very different model than I've ever seen before. But it was such a pleasure having you on.
Thank you.
I'm sorry you had to come here, and you know the beach is here, but I hope you had a blast on the show.
Excellent, had a great time.
And you know, I know you're going to probably really relate to me because I have hair and Rav doesn't, but it was a pleasure having you on. And we didn't muck up Rav's place, so folks, we had a fantastic show. If you want to get in touch with you, we have your information there. It's appear on the show. It was a blast. Thanks so much, sir.
Thank you, Brian.
Take care.
Cheers.